get a great price, you're going to get a rotten price. You're going to have to pay to get into a trade as good as that. You've got to pay the entrance fee, guys. Simple as that. You've got to pay the entrance fee. But to get into a trade as good as that is really, really worthwhile. You very rarely get an opportunity, for example, to sell here. If you did, oh my God, get me as much as I can. Literally, get me as much as I can into that phase there, guys. But that's not normal. That's very abnormal, to be perfectly honest. And sometimes even when you get that price, you have a little double take because you're not terribly sure about what the hell is happening here, because that shouldn't happen. Did anybody buy some fours with the parallel shift on the buy side of the bond? You should have. Anyway. So let's take a little goosey at the concept of parallel shifts. Let's see if we can spot a few opportunities. Remember, most parallel shifts will be properly priced. But what we're trying to do is spot parallel shifts that aren't properly priced. We'll take it from 1030. Why? Because it's the size of the screen that I've got in the screens at the moment. And we'll look at the parallel shifting phases. So we can see that there's a parallel shifting phase. And I'll just mark on one of the lines so that we don't have lines getting horrible here, right? So we'll mark it on the lines. And you can see there's a parallel shifting phase starting to happen here. Does everybody see that? So we get a parallel drop on the black line, and we get a parallel drop on the blue line. Does everybody agree that that's what we're seeing? Black line and blue line, we're getting parallel shifts. That is a parallel shift. It's not a big parallel shift, but it's a parallel shift. If I get a discount on that, I am going to annihilate it. Not just buy it, absolutely annihilate it, because it should never happen. It's a pricing anomaly because of the Grail trade. So when that candle downticks, guys, I am going to buy everything I can get my hands on. Everything I can get my hands on at that stage, at this point in the markets. The upshot from that was an incredibly strong profit. Does everybody see a parallel shift at the top edge? So the black line's rising, the blue line's rising, the price rises. Am I going to annihilate the sell side? What do you think, Randy? Am I going to annihilate the sell side of bonds there? Damn tootin' right I am. Going to annihilate the sell side of bonds. Down the bond price goes straight away. Parallel shift. Does everybody agree that into the top edge here, I get a parallel shift rise again, right there? Parallel shift there, parallel shift there. Is that an annihilation sell trade? Damn right it's an annihilation sell trade. There it is. People think these are rare. They usually are. Today's not been as rare as it normally is, probably because the bonds have rotated a little bit more than they usually do. When the market's really moving, you don't often get a chance because everybody's on board. Everybody's on board. Anyway, let's carry on. Parallel shift. Now, there's a question mark about this one, obviously, because it's not quite a parallel shift, you can see. But is it a parallel shift? If I went up another time frame, and I go from the blue line from there to there, and I go from the black line from there to there, on another time frame, and the price is there, have I got a parallel shift on a bigger time frame of 15 minutes? Would that be a parallel shift on a 15 minutes? Absolutely. Am I going to annihilate bonds at that price there? Absolutely annihilate them. Absolutely annihilate them. So just because it's not on your 5-minute chart, guys, doesn't mean it doesn't exist. Your 5-minute chart is a false combination of your decisions about what time frame to use. It doesn't mean it's not real. It just means that your reference point needs to also be expanded into the bigger time frames so that you're not losing sight of exactly what's happening. Anyway, let's carry on with that discussion. Is that a parallel shift in here? Some people might say no. I would argue that the answer is yes. Why is that a parallel shift? The blue line's going up, right? You're telling us lies. Nope, because if I draw a line from the blue line from there to there, and if I draw a black line from there to there, and I draw a price from there to there, I'm still in a parallel shift. You get it? Am I going to annihilate the long side of the market? Damn tootin' right, I'm going to annihilate the long side of the market. Did I make my big profit for the day? Yes, I did. Yes, I did. Huge profit for the day right there. So now I'm using the slope and direction of the lines to make these massive big decisions at best possible prices. Did I get a parallel shift into the sell? Let's take a look at the sell. Is this blue line rising? Is this black line rising? Yes, it is. With the blue line rising and the black line rising, the red candle drops. But does the red candle drop by much? Or is it approximately the same price? It's actually only one tick different, guys. It's only one tick different. As the price drops off that tick there, we can start to see the opportunity. Did I get a buy trade in here? Let's take a look at this one. Is that line dropping here into this low price? Yes, it is. Did I annihilate the buy trade here? Yes, I did. And has that buy trade made me money since that screenshot? Yes, it has. Straight up, buy trade at 4s, currently trading 13s, 14s. Another 10 ticks profit on that annihilated buy trade at the bottom edges on a parallel shift here. I'm going to be long the bonds and a very, very simple, easy money profit. Have I just made 100% winners on those annihilated trades? Buy trade straight up, sell trade straight down, sell trade straight down, buy trade straight up, buy trade straight up, sell trade straight down, buy trade straight up. 100% winners all the way through those trades. 100% winners. What are we looking at? We're looking at the fight and we're looking at the tut. We're looking at the fight and the tut, Peter. Yuko, the fight and the tut. The black line is the fight, the blue line is the tut. And we're looking at the relationship of the two lines to the bond price. Because bonds, as a rule, as bond prices fall, we should obviously expect to see a steepening of the bond curve. As bond prices fall, the curve should steepen. If the curve starts to steepen, we should expect to see the bond prices falling. If the curve starts to flatten at the front end, because of flattening at the front end, bond prices should be rising. That's what creates a flattener, doesn't it? The long duration buying and the shorter duration potentially selling. And in line with that, we're obviously trading the curve against bonds as a negative correlation. What happens when we get to high interest rates? What happens when we get to high interest rates? That relationship flips. Why does the relationship flip? Because weakness at the back end is getting the most time, isn't it? You understand? At the front end of the curve, the relationship is all about the short-term interest rates starting to rise against a big pop in inflation. As we get the big pop in inflation, as we get the rise in interest rates, the relationship changes at the top edge. The top edge is now dominated by the fact that the Fed is now on hold, the market's on hold, and everything's about the back end of the curve. Everything's about the back end of the curve at that stage. The Fed is too high, the Fed is too hot, the Fed is too long, the Fed is too whatever. And then obviously we start seeing that reversal opportunity coming out to play. Let's catch up with the S&P scalpers. What are we doing? Okay, it was a good bid, a very good bid. Well done anybody that bought the lower lows. I wish I was commentating at that stage. We had a brilliant buy trade at 92s. Traded at a high price of 8s.